Hi, it's Dwyer. Wealthspinning.blogspot.com, otherwise known as Money1776.com, a free site. Right? Also, DwyerPrivateEquity.blogspot.com, a free site. Remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Nothing I say in this video, which is being done October 1st, 2023, should be construed as investment advice. I want everyone here to do their own due diligence. No assumption should be made. No assumption should be made that I own all the stocks I'm discussing, right? In fact, let me add a further preface. I don't believe in diversification, right? I believe that your basic thesis needs to be correct. If it's not, then you need to quickly adjust it, right? The opportunity cost, in my opinion, is too great to just own hedges for the sake of owning hedges when you're investing. So I need for everyone to understand that I believe by far and away the best play right now that an investor could make is to purchase Bitcoin. I understand many investors are non-believers, and we aren't going to discuss Bitcoin too much. But what I want folks to understand is I've put a lot of my money into Bitcoin. Some of the investment ideas I'm going to mention here are really ideas that I'm following so that later I can step into some of these investments, right? In other words, I believe that Bitcoin is the best investment if you're a risk taker. GBTC, the Grayscale Bitcoin Trust, which is trading right now at more than 20% below net asset value. Right? For more on my Bitcoin theses, you can visit my Substack page. There is a free component to the Substack page. It's Dwyer, D-W-Y-E-R, 70905.substack.com. Again, that's Dwyer, D-W-Y-E-R, 70905.substack.com. So let's get after it here. Let's talk about what I consider the hot areas in the economy. First, let's talk about electricity. You know, there was a panic, much of it political, over the electricity used for crypto mining, right? Bitcoin, Ethereum, etc. We were hearing that that was an environmental hazard, right? I would argue that the argument was completely made up for political expediency, right? Many people who accepted lobbyist money in Congress from the banking sector, legacy finance, needed a way to criticize Bitcoin. You have this environmentalist movement out there. Everyone wants a greener planet. People believe in renewable energy. The argument that crypto mining was somehow depleting the planet got traction. Right? Well, if you in fact believed that crypto mining was depleting our electrical resources, was placing an undue burden on the electrical grid, what I want folks to realize is that right now, electric vehicles, EVs, are thriving in places like Northern California, where I live. Right? You may have heard of Tesla. You may have heard of Lucid. You may be aware of the fact that China right now, one of their most bullish industries, is their exporting of EVs to Europe. Right? Just understand, folks, the burden placed on the electrical grid by electric vehicles is huge, especially if you thought the burden placed on the electrical grid by Bitcoin mining was huge. Just imagine cars in all 50 states here in the United States. Right? Being EVs, some states, California for example, is pushing for not just passenger cars, but trucks to all be electrical. And you're hearing dates by which this is supposed to occur, by which they're going to start banning internal combustion engine vehicles. Right? Just understand that EVs have a huge demand on the electrical grid. And EVs are just getting started. Right? I was down in LA, and to my surprise, I didn't see a lot of Teslas on the road. Right? In Northern California, they are all over. Just understand, as Tesla, as Elon Musk, is able to expand his business presence, as you have more EVs on the road, that California electrical grid is going to really face some pressure. Well, folks, I need for people to figure out how great the pressure is going to be. Because now you have another Goliath. In fact, this one might dwarf the demand EVs will have on the electrical grid. It's called artificial intelligence. Has anyone figured out how much electricity AI is using? Understand, artificial intelligence requires these digital data centers, all of these servers that are crunching a lot of data. They call it a large language model. Emphasis on the word large. So when you're asking for a couple of paragraphs, maybe a full-blown essay on some subject matter from ChatGPT, right? Just understand the electricity being used is huge. Now multiply that. AI is just now filtering out, right? Actually, it's more of an evolution than a revolution. But understand, a lot of people are now using AI for research memos. They're asking AI to summarize books, long articles, right? You can type in, summarize, put the URL, and believe it or not, ChatGPT will summarize the article. That requires a lot of electricity. Magnitudes of the electrical use that cryptocurrency mining uses. Right? Magnitudes. So you add it together, the direction we're going. If you, like me, believe that Bitcoin is going to be a bigger part of our future than it is right now, that the SEC is going to start to approve these spot Bitcoin ETFs in the coming months, institutional money is going to flow into Bitcoin. Right? Then we're going to start looking at Ethereum, smart contracts, decentralized finance. You're going to have a lot of these proof of stake outfits settling with the SEC. If you believe that's going to be a drain on electricity, and if you're looking around you and you notice a lot of people plugging in their cars, you understand that whether you're driving your own EV or you're in a robo-taxi that's an EV, you understand that electrical vehicles are here, they're growing, they're expanding, they're going to be with us. If you believe that's a drain on the electrical grid, and then if you understand the amount of electricity that's needed for artificial intelligence, then you understand the huge, and I mean huge, opportunity that picks and shovel plays to upgrade the electrical grid and its capability will have. So, I think people need to look for small, new tech, right? Increased portability, nuclear plant companies right? They need to think about nuclear energy. You want to consider the company that produces 18% of world uranium production, Cameco. The symbol is CCJ, right? You want to keep an eye on a private company that's not yet public, but that has well-known investors like Peter Thiel and Sam Altman behind it. That company's called Helion, right? You also want to look at the public markets and consider BWX Technologies. The symbol is BWXT, which provides the military with modular portable nuclear reactors, which would be a game changer for civilian use. Right? Just understand, as portable nuclear reactors for civilian use are years away, at least their widespread adoption, you need to expect energy prices to go up in the short term as you try to profit from the trend. Folks, the opportunity is there. Let's also talk about oil. Full disclosure, I'm a longtime holder of Exxon, right? But let me just say, I hope by now we all realize that interest rates are going higher. The Fed Chairman Powell is talking about another rate hike this year in 2023. Now, there's much talk about the United States being energy independent. Folks, that's at a certain price point. Right? You understand that's not true, because if it were, our strategic oil reserve would not be depleted right now. We wouldn't have a reason to be tapping it. So just understand, at a certain financing cost, because the capital investment needed for shale exploration is huge. Once you hit a certain rate of interest, the United States has to think about importing energy. Put differently, shale production is interest rate sensitive. So if the interest rates are going up, and if we have to then compete on the world market for oil at a time when Russia is still fighting the Ukraine, and that's impacting supply chains, at a time when politicians seem to be able to pick up votes by sounding tough and imposing prohibitions against importing Russian oil, which is happening all over Europe. Right? Given this politically uncertain environment, I believe oil is going to continue to increase in price, at least for the short term. Now, a company that I've owned in the past, Permian Resources, the symbol is PR. I believe they're well situated. You also have VNOM, right, which is the symbol for Venom. Venom is a independent oil and gas exploration company, right? I told you earlier I own some Exxon. XOM is the symbol there, right? You may even want to look at just basic oil energy ETFs, XLE and the XOP. Let's talk about another growth area. You heard me mention AI, right? I need for folks to understand that AI is very capital intensive. You need to have access to large language models. You need to be able to operate at a loss at least in the short term, as the industry figures out how to lower costs to itself, right? So it's big companies that dominate. I know all of these ads for financial newsletters are talking about some new AI startup and stuff like that. When you have a field that is this capital intensive, I believe you need to look at the old guard, because they're the ones like Microsoft who are buying chunks of OpenAI, right? So, NVIDIA. I still believe NVIDIA, as highly priced as it is, has at least another year of runway ahead of it, right? It has the advantage in the space on GPU production. Then, of course, you have Google. I can tell you as a user of Google Bard, right? That's bard.google.com. That service has increased exponentially in the quality of what it's providing over the last few months. And of course, you have Amazon and Meta. I believe they're all major players. But what I want people to do is to also think about the picks and shovels. AI requires data centers where you have the servers that do the work when you enter an AI request. Now, there's a great company out there. They recently sold their stake in the Bellagio and got paid handsomely for it. You might know them, they're Blackstone. The symbol, of course, is BX. Right? Just to understand that Blackstone wisely is buying up data centers. Blackstone quietly has a meaningful data center component to their holdings. Now, given all Blackstone is doing, let's just say I find Blackstone to be ahead of the curve. Give it a look. You also have Super Microcomputer, Inc. The symbol is SMCI. Right? They're involved in creating the servers that are at the data centers. Right? So just to understand, as AI requires more and more data processing, supercomputer is helping to process the data. If you believe in AI, you should believe in these data centers. I think Blackstone and Super Microcomputer, are an excellent way to play that angle. Let me also point out this. I believe with higher interest rates, you're going to have an economic contraction. We're looking at a recession at a minimum, in my opinion. Right? Everyone has a happy face. You're hearing talk about a soft recession. I don't know where these people come from. I can tell you, I talk with my friends. Many of them are engineers. Just an odd fluke in my life. Right? I talk with my friends, and they're absolutely clueless. Right? They barely, they have jobs. They don't seem to realize that AI right now is endangering the jobs of most of the coding industry. They don't seem to understand that autonomous vehicles and robo-taxis are endangering the jobs of every cab driver out there. They don't seem to realize that the CAPE ratios, the stock valuations, are very high when viewed against historical values. Right? They don't understand that people are tapped out on their credit lines, their credit cards. Let me also point out, too, I have a friend. This guy, when I was in high school with him, he was brilliant, right? Scored 100 on the New York Regents exam in trigonometry way back when we were in high school, right? This was the guy who you understood, knew the math, knew the numbers, right? I was the friend who would go to him and say, hey, what's 8% of 90? And the guy would be able to spit out numbers. Right now, let's just say that adult life is such that we lose the ability to look past our own cubicle. Right? This guy barely knows that Bitcoin exists. So this guy has a thesis, and it's backwards, where he claims because a lot of people got low mortgage rates before interest rates started to jump, right? And today, if you're trying to get a mortgage with great credit, you're going to be paying over 7%. Right? You're paying over 7%, and you don't have the tax breaks that you once did. Now that we're post-Trump tax reform. Right? Well, this guy's theory is, hey, well, people are in their homes. They got them at 3% on a mortgage. The sales of homes have dropped. People are okay because many have 3% on a mortgage and there are hardly any sales. People aren't losing money. Let me just say this, right? You do understand that when there are fewer transactions, a market's at greater risk, right? If you buy and sell a lot of stocks, you want a lot of liquidity, don't you? You know, I feel good if I own Google stock and I need to sell Google stock because I know there's a vibrant market for Google stock. So the market price is what it is, right? If I post Google stock for sale on my brokerage site, I know someone's going to come along and buy it at what I'm listing it because there are a lot of buyers and sellers. There's a lot of volume. When you reduce market volume, folks, that raises volatility, doesn't it? That's when you see the price of the last transaction, you post at that price, and the very few people in the market have the opportunity to say, hey, he needs a buyer. I'm going to play hard to get. I'm not going to pay his price. Where else is he going to go? The volume is low. He doesn't have many places to go. Folks, once the real estate market figures this out, I'm expecting prices to tumble. So let me just say, a play that's been good for me, an inverse ETF on the residential real estate market, SRS, is an inverse ETF I'm going to continue to hold. This does well when the real estate market does poorly, right? My point to people is, sooner or later, even folks with low mortgages are going to realize that it's not the value of their financing that they have to worry about. Rather, it's the value of their house. Let me also point out, too, there's a cost to staying in a house simply because of financing. The phone rings. Your friend says, hey, Joe, we have a job opening here in New York City. I can pay you twice your current salary. Come on over. We'll even be able to give you some breaks, a housing allowance, and all that other stuff. Now, if you're someone who's afraid to sell their house, especially given that rental prices are dropping, let's say you're afraid to rent your house, you don't have a lot of choices. You might have to forego that job opportunity, right? Just understand your mobility gets negatively impacted when you are chained to a house simply because you believe that your 3% mortgage provides you with so much of a bargain over the current mortgage rate that you feel you can't sell your house. Well, understand the way markets work, folks. The value of your house, unless you have a lot of equity in it, the value of your house is going to fluctuate. I understand if you're price insensitive and you're committed to your neighborhood, okay, that's a different story. But I believe many homeowners are going to start to see their prices drop in value because the market prices now are being dictated by a smaller number of buyers. Right? You know what they say, your house is worth what someone's willing to pay for it. Well, now there are fewer people in the market. The transaction is down. So your $1 million home, while you're holding on to your 3% mortgage, might drop from $1 million to $800,000. Whatever break you're getting on the financing, you've just lost $200,000 worth of equity. Not only that, as the rental market continues to soften, you realize that you're paying an opportunity cost because you might be able to rent a house commensurate with your house without the overhang of a mortgage payment, without the overhang of a 7% and higher mortgage rate. So, I hope people take a hard look at some inverse ETFs. I like SRS. Let me also point out too, I've mentioned Opendoor as the other side of a barbell type strategy that I had in housing. The volume has dropped so much in the housing market, folks, that I have sold my Opendoor stake. I do plan to buy it back because I do believe that Opendoor has a natural monopoly that a lot of people in the future are going to buy and sell real estate online. I do believe Opendoor has functionality going forward. But I also believe that the volume is low and that I'll have an opportunity after housing plunges a bit to get back into Opendoor at more reasonable prices. I don't want to pay the opportunity cost of holding Opendoor while it decreases in value. So, I'm holding on to SRS. I would encourage people to look for inverse ETFs on residential real estate. Right? As the market goes down, the value of your inverse ETF goes up. Those are the things I'm looking at. Let me hear from you. If there are any comments you want to make about any of the plays I've mentioned here, if there are any plays you want to share with other subscribers, then I hope you do so in the comment section of this video. Let me also offer a caveat. On some past videos, some people who know I'm into crypto have asked crypto questions. Please direct those to my account at Dwyer70905.substack.com. Okay, as I've said, it has a free component. You don't have to pay the $5 a month to stop by and look at some, at least the beginnings of some of what I've written there. Okay, thanks for stopping by, and I look forward to your comments and questions.